Hello, everyone. Welcome to the stock-specific class here for Thursday, May the 27th. We really haven't gone anywhere for the last couple of days. The market is really showing signs of indecision, and we've talked about this over the last few trading sessions that it's been just kind of whipsawing back and forth. Even some of the common price action reversal formations that would normally work on at least on a short-term basis have been working. We had a couple of bearish reversals earlier in the week, and the market just rebounded right from them. So that's just kind of the environment we're in. It could be that the market's just waiting for something to trade on. I talk about this all the time that traders, especially professional traders, you always have to remember this: the professional traders are the ones that move the market, the big institutional investors. And if they're, particularly when they're selling, they've got to have a reason for the selling. If they just start selling and there's no reason behind it, it's risky for them, because if the market rebounds from that sell-off and goes higher, they've got bosses that are wondering why they sold. And if they just said we felt like it, or that was a part of the plan, or what have you, it doesn't carry a lot of weight to their bosses. So usually, and I talk about this a lot, about looking for triggers. Sometimes you see the price action, you see the chart patterns lining up for a move that could be bullish or bearish, and you kind of are waiting for some sort of news item that is the trigger, the reason for the buying and the reason for the selling. And so I think we're kind of in that environment right now, and it could be the jobs report that comes out. I think I don't trade off of the economic reports. I think it comes out next week, if I'm not mistaken. I have to double check on that, making sure it's not tomorrow. But that could be a reason for buying or selling. Sometimes a news event can be just come out of nowhere, or it could be something that happened in the trading day. We've seen the markets move on rate, the bond yield moves lately, where when the bond yield really jumped up, this is several weeks ago, the market kind of freaked out at first on that. So it could be something like that. But regardless, we're just dealing with a little bit of indecision right now, and that's kind of reflected in the signals. And we're kind of slightly in the buy area for momentum. Same with breadth, and same with sentiment. If we take a look at the charts, now there is this happens sometimes on the software, but you'll notice on a couple of these charts, these are duplicate days. They're the same candle. That'll end up fixing itself here in a little bit. That happens sometimes on the software. So you didn't have two exact same days there, but you can see overall, though, even if you wipe out one of those duplicate days, we've just been moving sideways. And not only are we moving sideways, but the price action is getting smaller and smaller. Look at the body of yesterday, the body of today. It's just, and we've been studying candlesticks in the trainings that we've been doing lately, and that's what it's showing. The price action is showing you there's indecision. And what we want to see is something like this. We want to see conviction. There's a lot of buying that took place through here that pushed the market up. The market was moving up several days in a row. And to be honest with you, if you trade the market both ways, you don't care if that movement is up or down. You can make some good money on these drops too, but you need consecutive days where it's dropping. You get the back and forth, and it's a little bit harder to make the bigger money. At least you can see some of the whipsaws into this area right here as well. So that's just kind of the condition we're in. We can look at some of the other indexes as well. Actually, the one index that is kind of moving right now, or seems to be moving a little bit, is the Russell 2000. It had a nice bullish day yesterday. It's kind of continued. Although the body today is pretty compact, pretty small, but it looks like it's starting to move a little bit. Now, what could that be an indication of? Well, that could be a little bit of an indication of a risk-on type environment. I say this many times, but when you see the small caps start moving, this is where the big institutional investors make their big profits, is on these smaller companies that can go from a $5 stock to a $20 stock. But they also have to balance that with risk. If the risk environment, if the market could be going down, those are the first stocks to get sold, because some of those companies could go out of business. And so there's always constant money rotating between the big solid Dow stocks, S&P 500 stocks, and into the smaller, riskier trades. And so what we're trying to gauge here is, do we see some of that taking place? Remember, our job, I keep reminding everyone, but our job as trend traders is to try to see what those big institutional investors are doing and trying to follow them. We're not trying to be smarter than everybody out there. We're not trying to, predict what's going to happen next. Let everybody else do all that. Let them spend all that money analyzing stuff. We just want to get really good at recognizing what they're doing, because even if we are the smartest, and even if we are able to outpredict these big institutional traders, we can't move the market without them. I can't cause the stock to go up with my 100 shares I'm buying of the stock. So again, we're trying to figure out our competitive advantage, and our competitive advantage is to get really good at seeing what they are doing. So these are little clues that you can look for. Do you see maybe money flowing into some of the small cap stocks? So whenever I see the Russell 2000 start taking off like this, I've got watch lists of some of these startup companies, some of these recent IPOs that, and not necessarily recent, they could have been trading for the last year or two or something, but they're relatively new companies. And example of this would be there was a big burst in the electric vehicle stocks back in the fall. If I start seeing the Russell take off, I go back and look at some of those stocks, see if they're starting to move, see if they're starting to show uptrends or show bullish patterns, and see if I can't, because obviously there could be that institutional money going back into some of those areas, and you want to see if you can kind of follow along. Okay. All right. So that's kind of the environment we're in right now. Let's get into some specific stocks that we could look at. Oh, I did want to point out one thing we were looking at was bonds, the TLT. I said I'd check on this on Thursday, which is today, but last Tuesday we were looking to see if we were getting close to breaking out here. Again, this has a duplicate day right there. I think all these charts do. But this was the move on Tuesday. We were getting close to going to that higher high. So that would be kind of significant, because you have a higher low and then a higher high right here. Well, today, as we got close to that point, we had a little bit of a bearish reversal candle yesterday, and then we dropped today. So bond yields have started to go back up again. Bonds are starting to drop down again. And really what that tells me is that we're still in kind of that no man's land. We haven't gone to a higher high. We haven't gone to a lower low. We got to be kind of neutral right now, neither bullish or bearish on bonds. But those are the key areas there. We want to see if it breaks out above this area or below this area, and that'll give us a stronger indication of what that near-term trend is on bonds. So we'll keep an eye on that next week. By the way, just a reminder too, most of you probably already know it. You probably already have plans, but Monday is Memorial Day. The market is closed. So basically the end of the month will be this Friday. The last trading day of the month will be this Friday. And next Tuesday will be the first trading day of June, and just be aware of that. All right, let's get into some individual stocks. Some of these I covered, especially the retail sector, I covered on Tuesday, but they're still in an area where I'd still like to, I'd be interested in them. If we go to the hold section here, one of them was Jumia, JMIA. It's a 96 strength rank. But I like let's switch this over to signals here. Or what I talked about on Tuesdays, I like the fact that it has this look like it's starting to turn the corner and maybe starting to move back up. It hasn't gone back to a buy signal yet, but I said by the time it goes to a buy signal, if it does go to a buy signal, it would probably be more clearly showing that possible reversal taking place. And this is an area where I really like to. I love to get into stocks in this area here because it's a little bit risky because you don't yet have the clear indication of the trend reversal. You have just some early signals, but especially when the stock has pulled back this far, you can always look at the previous high as a target area. And if this stock starts to go back up and trend back up, it very often it'll work its way back up to that previous high. And if the company is really in good shape, break above that previous high. So, with a stock down here around 30, that's a double if it can get back up to where it was before. Now, obviously, it's not going to do that immediately. This thing has fallen for the last several months. But very often, if you find yourself looking at charts when stocks have made big moves, you can go back to a 1-year chart on this stock even. And, if you ever look at these stocks and say, but man, I wish, why can't I get in down here, and you long to get those really big runs in these stocks. Well, when you're down here, it's not going to feel bullish. It's not going to feel like it's strong. It's not going to feel like it's something you got to get into. That's what you feel up here is at the top, is that this stock's going to go up forever. This trend is awesome, and then right about that time is when it reverses trend. So, but notice back here, you had kind of that bowl-shaped move. It started to move up on the right side of that. You could have bought the breakout of that bowl. We talked about the cup with handle formation. There's kind of a cup. Here's kind of a handle right here. Broke out of that. Now, it's just kind of subtly showing that it could be reversing. It's possible inverse head and shoulders pattern may be forming. Now, a real key element would be to go to a higher high. So there's the previous lower high. Here's a lower low right here. And if it can get up above $35 here, that would be a real strong indication that the stock is turning the corner. And, I talk about this too all the time. How you manage your trades can depend on a number of variables, a number of factors. You want to be aggressive. If I was aggressive, I'd be looking in this area right here to get in, maybe waiting for that buy signal, which could show up pretty soon. If I wanted, maybe I was a little bit concerned about overall market conditions or something like that, maybe I wait for it to go to that higher high, get that confirmation. Maybe I want to see a full stair step up, really see some stair steps moving upward there before I get in. Those are all different. It depends on kind of your risk tolerance, and you still have to manage these trades. But you can have a more aggressive entry, and still manage the risk. You could wait to get in on a buy signal and then put a stop below. We had a little bit of a sideways move through here, put a stop below there. That'd be a pretty tight stop, but there's different ways you could manage that risk of getting of a more aggressive entry. Now this ties into what I was talking about earlier with the Russell 2000. That looks like it's starting to jump. Now I still am not overly bullish on the Russell 2000. That's the overall chart pattern for the last few months is the weakest. That's the weakest chart pattern on all the indexes. It looked like a bearish head and shoulders pattern, regular head and shoulders pattern on the Russell. But if it's starting to wake up and take off, these stocks, these small cap stocks, are ones that could start to follow. Another one I like in the sector, and I talked about this one on Tuesday. I believe I talked about this on Tuesday as well. Is this STKS, the one group, 95 strength rank. Now, I mentioned I wanted it to hold this support area right here. Again, this has duplicate days on Tuesday, but it did. Tuesday was the low. Yesterday it started to move up. It's like it started to move up again today. It'd be nice if this thing could continue to move higher, but we're waiting for that to turn to a buy signal anyway. See how close we're getting. We're getting pretty close. Another decent up day would probably put you into that buy signal there. All right, let's go into industrial products. And I like the one at the top, 97 strength rank, CLIR. And it's gone to a buy signal today, actually, but it has that look of a inverse head and shoulders pattern right there. Again, you can kind of see it looks like it's starting to work its way up out of kind of a little bit of that bowl-shaped move. This would be probably a key area right up here. It would be going to it would be breaking out of this kind of resistance area right here. You do have a little bit of a higher low right there, and with today's move, a little bit of a higher high. It's got some of these little subtle movements here. You could look at this as a larger ABC correction, correcting this larger trend right there. So it's had a larger pullback, and it could be starting to move back up again. That one looks pretty good. And then under industrial products, I think I talked about this a little while back, but Alcoa, there's a name that is pretty recognizable now. When I brought this up before, I was talking about this as a possible bullish ABC pattern right here. And I think I said I want it to kind of hold because there's some resistance right in that same area, support right here. I want it to kind of hold right there. It did dip down below it a little bit. I said that can happen sometimes because back here I said it's possible, especially with that sharp move down right here, that it could dip a little bit lower than that support area. Whenever you look at support and resistance areas, you got to be a little bit careful not to focus too much on exactness. Very often I'll call them support or resistance zones or areas. Many times you'll see stocks go right to those areas and reverse right in those support and resistance areas, and so it looks exact. But when you look at a lot of charts, there is little variations. You know, here's a resistance area right here, or a support resistance area. Here's resistance back here. The stock pulled back to it, dipped a little bit below it, and then came back up. So, you know, there is a little bit of allowance there for it to kind of bounce around. But the key is it bounced off of that. You had a nice big update today. And so we'll see if that is fueling a rally in Alcoa. A lot of the industrial stocks have done pretty well today. Let's look at the volume of that move. The volume's kind of light, though. I don't know how up to date the volume is on the software here, but have to see how that ends up. We're still waiting for it to go back to a buy signal anyway, but you'd like to see higher than normal volume on a day like today. So we'll see how that settles out. Hopefully it settles out a little bit to where it's up up in this area right here. That'd be a pretty good sign that this thing could be taken off. All right, let's get into one that sometimes I talk about this sometimes. I like to go to the hold section first because these are ones I can kind of anticipate they're moving. They're gonna. I'm waiting for them to go from hold to buy. Sometimes though you can find stocks that have recently gone to buy or maybe have been buy signals for a couple of days, but they're still in a good position for a big move. And so don't be afraid to check stocks in some of the buy in the buy area. Again, you're looking for that 90 strength rank or higher 90 strength rank, preferably 98 strength rank. But you'd like to see it in that higher area there. But here, Plug Power is a 96 strength rank. And I think this is one that we were looking at when it was a hold signal. Let me take the volume bars off here so we can see this. But this is very similar to Jumia. And this is very close to going to a higher high right here. But you can see it looks like it could be start to turn the corner. That's a key spot right there because that was the last lower high. There's a lower high, lower low. We rallied up. We rallied up right here, and then we're moving a little bit sideways right here, and that's what makes me feel like this is a kind of that inverse head and shoulders pattern that's developing. Really good confirmation would be if it broke out above this area here and went to that higher high. So you have the buy signal, and it's just recently gone to a buy signal. If you want to wait for a little bit extra confirmation to get that higher high right there, I think that'd be really good. And then if this has turned the corner, you have a lot of upside potential. This thing was topped out at about $75. Again, you're looking at a stock that could possibly double if it is going to work its way back up to that other area there. So, all right, let's do a couple more. I found some under computer and technology. We haven't been in that sector for a little while. Top of 99 strength rank is Blink Charging Company, BLNK. We've pointed this one out a number of times. I like the stock, but there again, it could be turning the corner. You have kind of a double bottom right in through here. Now it is possible that this is just a rally within the downtrend. You always you don't want to kind of. I don't want to try to force a chart to kind of look like what I want it to look like. That's why some of these moves are very subtle in these early stages. Definitely, this is a key area right here. That would be that was the lower high, lower low. Get back above that area would be your first higher high right there. But like the other stocks, you had this kind of move off the bottom right here, and then it's kind of consolidated, move sideways. Anytime, again, you hear me say all the time, is anytime you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moved sideways. That's where it's more likely to move in after it's done moving sideways. Not guaranteed, but usually more likely to move in after it's done moving sideways. And so that kind of fits that analysis as well. And then under computer technology, I know a lot of these stocks have been beaten up just because computer technology used to be at the top of the list back at the end of the year and early in the start of this year. And we are getting all of our specific stocks each week off of the computer technology sector. In fact, you knew you could find something almost every day out of that sector. Since then, I already know that these stocks have been beaten down quite a bit. And because of that, it's another reason why I like to look sometimes into the buy section right here. Sometimes you'll see stocks that have maybe even had a buy signal for several days, but they have that possibility of going all the way back up to their previous highs again. Now, I don't want to chase. Here's a stock that was has really made a big move today. GoGo. This is if you've ever flown, I fly JetBlue a lot. They've got the Wi-Fi on the plane. This is the company that provides that service for services for a lot of the airlines. But this is here's where it kind of was making its reversal. Here's where it broke to a higher high right here, and it's had two big days like that. I don't usually like to chase something like that, but let's see if we can find some other stocks that might be making similar moves, in that buy section there. So let's look at 3D Systems, 93 strength rank. It's had a buy signal for a little while, but again, if you look at the previous high up here about 56, there's that potential for it to work its way back up there. Now, it has had a pretty good run here the last few days. Maybe you wait for it to pull back again and give you a higher low. But that's one to keep an eye on. You're probably going to have multiple chances to get in this thing if it is turning the corner here, and it does look like it, because again, here was a lower high right here, lower low, broke out. There was the real key day right there, because not only did you have a big strong up day, but it broke to a higher high right there, pulled back a little bit the next day, but then took off. Here was the first buy signal that kicked in, but the stock is not likely to go straight back up again. It's likely to stair step. And so as it pulls back, and these can provide entry points along the way if it keeps going higher. So that's one I think you can kind of keep an eye on and see if it's now again, if you're not trying to trade it, you're just and you like the company and you want to be in it more longer term, and it's showing good momentum right now. It has a buy signal right now. You can go ahead and buy and hold it with the anticipation that it could work its way back up to that previous high over time. Again, it just depends on what your trade management, money management technique is. And one last one here, again under the buy section, is this RMBL, 95 strength rank. Again, it looks like it's showing that reversal. You had it kind of looks like that inverse head and shoulders pattern kind of forming, but then look at that V-shaped move. It moved sideways right here. It sold off sharply, and then buyers pushed it right up sharply, and now it's consolidating again. Again, whenever you see a stock moving sideways, pay attention to the direction it's moving before it moves sideways. That's where it's more likely to go after it's done moving sideways. Now, could be sideways for a little bit longer. I mean, this was a pretty long stretch right here where it moved sideways. But there's a lot of once it does break and go, and it could be breaking out today a little bit. There's that potential it could work its way back up to these previous highs again. All right, that's it for the stock specific section. Let's get into the trading for today, and we're still talking about candlestick formation. We're just about out of candlestick formations, and you'll find that the ones we kind of get into now are very similar to other formations as well, and so there's a lot of similarities there. In this case, it's another reversal type candle or pattern. And what we're doing now is we're looking at combinations, meaning what we were focusing on before were just single day type patterns. The indecision days or bullish engulfing, bearish engulfing type pattern. Well, I guess those are kind of combined patterns where you have an upward move followed by a downward move. So we're going to go over a few more of these, but again, you'll notice that there's similarities to other patterns as well. And again, it's not important that you remember the names, but that you kind of recognize the chart, the price action, and are able to recognize when it's acting like it's strong or acting like it's weak or acting like it's likely to continue or acting like it's could be reversing. The ones we're going to talk about today are the morning star and the evening star. Now, the morning star, an easy way to remember it, one is bullish and one is bearish. The way I like to think of it is the morning I would think of is starting down here and going up, and then evening kind of would be having been up and now it's reversing and going down. And so the morning star is the bullish version of the pattern. The evening star is the bearish version of the pattern. And I don't have a slide here to show you, so I'm going to draw kind of the formation that you're looking at. And keep in mind that let's go into our Dow stocks here. And the reason why I do that is just these are companies that you recognize, and so it's kind of nice to practice on some of these companies that you're familiar with. And like what I was going to say is, keep in mind that with these patterns, there are some kind of guidelines that go with them, and sometimes if you're too strict with the guidelines, you can eliminate a lot of trading opportunities, and you're kind of missing the point. Obviously, some patterns are going to be stronger than others. For instance, a hammer formation we're pretty familiar with. If that hammer closes at the high of the day after being sold off all the way down here, it comes all the way up, closes at the high of the day, and the volume is higher than average, that's ideal. There's such a strong probability that stock is going to move up off of that formation. Well, what if there's a little bit of a shadow or a wick right here on the upper part? It still closed higher than where it opened, but it backed off a little bit at the close of the high of the day, and the volume is maybe a little bit below average. Well, do I not trade that? I mean, that's still a reversal price action. It's not as strong as the ideal hammer formation, but it doesn't mean I can't trade that. But I will go into that trade recognizing that it's a weaker version of the pattern. So if it fails, it's not going to surprise me too much that it fails. It still would have a high probability of moving up the next day, just maybe not as high as if it met all the other criteria. Okay, I think that's always important to point out with these formations, because I can't tell you how many classes I've taught with candlesticks, and I'll look at an example or point out an example, and I'll have a student that says, "Hey, according to the rules, that would not be technically a hammer formation," or something like that. And I'm like, okay, but I've been trading a long time, and the market is never exact. I mean, or if you're looking for it to be too exact, you're going to have hardly any trading opportunities. I mean, if I look for the pure 100% follow the rule pattern, you just never find it, because it'd be so rare to find. So you got to have a little bit of flexibility. Now it's a slippery slope, because you could find yourself, going down a road where you start looking at anything. It has a really big tail, and you're calling it a hammer formation when that's a spinning top formation or something like that. So, which would be indecision, something like that, But again, have a little bit of flexibility with some of these things. But I will go over kind of the main guidelines of these, and then we'll deal with some of that, the flexibility parts of it. Okay. Now the morning star, the key to this again is that it needs to be coming off of a bottom. So you'd like to see the stock dropping. So you'd have these red candles on the drop. And then the key is the first day needs to be a big a pretty big down day. Now, this is relative, so you'd look at the stock and say, well, relatively speaking, was it a pretty big down candle? Because some stocks, they tend to have really small bodies, and then they have a, what would be considered still a small body on another stock might be actually a pretty big down day on that stock, that particular stock. So you have a pretty decent down day. A lot of times I like to see a little bit of a spike in volume on that. It would indicate a little bit of a flush out of the sellers. The second day should be a gap down. There should be a gap between the first day and the second day. There again is where that could be you could have a little bit of flexibility with that depending on the context, but ideally you'd like to have it gap down, and you want that second day to be a small body. And it could be a little bit of a spinning top where you have intraday high, intraday low. It could be a doji where it's open and closed right at the same spot. It has an intraday high and intraday low. You want to see indecision. And that's where that small body will indicate it. See, something like, that's not the context here, but something like these little moves right here, or there's a little bit of a small body with tails on or shadows on both ends there. The next day, you want to see a pretty good, you'd like to see a gap up the third day, although officially that's not necessary, but it'd be nice if you could see a gap up the next day. And the key is you want a big body the next day in the opposite direction, and you want it to trade into the body of the first day. And preferably more than halfway into the body of the first day. And you'd like to see above average volume if you could with these, but at least average volume. You don't want to see it be real light volume necessarily. Now again, that's the formation. That should indicate the reversal, that you should be reversing. And I want to walk you through again the psychology, because that's really what we're reading through all this is the psychology. You've got sellers. We don't need to know why they're selling, but they're selling. They're selling, and the price is moving down. You have a pretty big down day, relatively speaking, a downward candle, followed by and by the way, this second day, it could be a red or white candle. It could close lower than the open or higher than the open. The key is just that it's showing indecision. And in this case, it would be gray or red. But something like this would do, even if that would be it closed higher than where it opened, something like that, but compact. So you'd like to see it gap down the next day, indecision. So the sellers have been selling, and then suddenly showing that indecision. Okay, what do we do now? Should we start buying, or somebody's thinking about buying because it's kind of breaking that cycle there. And then the next day you want to see the buying come in. People are buying. And now remember, you have this big move down, and if it's on higher volume, it means a lot of people are selling right there. And when you have an up day and now you're moving into that same area price action, well, think of it this way. Let's say the stock was dropping. Let's say you bought the stock at $58, and the stock was dropping on you, and it's dropping and dropping. Now there's fear. Now you're like, oh man, I'm losing. I'm going to get out here at $55. This is terrible. And the stock moved down the next day to $52. And then the next day, it's gone up to $56. What are you thinking now? You're thinking, oh man, this thing's going back up again. I don't want to miss it going back up, because I bought it at 58. This is my chance to make my money back, right? And so what do? You join them and buy in right there, and that helps all that buying kind of helps push things higher. That shifted that mentality. So with the higher volume on this down day, you got a lot of people that were giving up right here. Then you have a day where they feel like they were right. It went lower again. A good thing I got out. I got out 55. Now it's at 52. And then the next day the buying comes in, and now as it triggers in all these different price areas within that candle, all these different levels that people were getting out, and now they're wanting to jump back in. They're afraid they're missing out, and it kind of fuels that reversal. Now, ideally, again, you'd like to see it gap up the next day up here, and then, but again, the key is it needs to trade into that candle the first day. But the second gap isn't as important or necessary. Okay. So what's an example of this? Well, here's one right in front of us here on Intel, where although again, ideally you would have wanted a steeper decline going into this, but you had this big down candle right here. Let's throw some volume on here to see if it. So you had to look at the spike in volume. Look at that big volume on that drop. You had the indecision day the next day. It doesn't matter what color that is. It's just we want to see a small body. It did gap down the next day. So here's where it closed the day before. Here's where it opened the next day. So it did have that gap down. Tried to rally up a little bit. It was compact. And then the next day, it took off, and it traded well within the body of that previous day. It did pull back a little bit right here, but it ultimately ended up moving higher off of that reversal. That'd be kind of a little bit of an example of a morning star reversal. We go to Procter & Gamble. Now here's where. Oh, just a second. Allergies are killing me. This would be a little bit of a variation, and this is where I kind of differ from some people that would be really, really strict. You kind of had two indecision days right here, but you had the big candle going down, did gap a little bit lower at the open. It didn't have the full move the next day. In fact, it tried to gap up and then closed a little bit lower. Here was the bigger candle on the day after that. Again, this would be kind of bending the rules a little bit, but again, what's more important to me is making sure that I'm reading the right psychology. The same thing is happening here. It just happened kind of a day later, where you had the sell-off right here, the indecision that lasts a couple days, and then you had the buying the next day that really put you into the body of that downward, that first day candle right there. You get these people they're afraid they're missing out. They want to get back in again, and that kind of fuels that rally. Let me put the volume back on. We can kind of check. So yes, you had heavy volume here, lighter volume the next 2 days on the indecision, and then you start to see volume pick up. Not a ton of volume that next day, a lot of volume on this day right here, which would make sense because now you're moving beyond that candle, that down candle right there. Let's look at Travelers TRV. Here's a real good example right here. See, well, again, this would be a little bit of a variation of this. I mean, you did have a pretty big candle right here, little bit of a tight, small candle right there, and then another bigger candle right there. But you had this really big down day right here. These next 2 days moved into this one moved completely reversed that down day right there, this reversal right here. But if you look at even beyond that, you have these two. If you look at the 2 down days right here, indecision, and the 2 up days, notice how you're moving into the body of these candles, and look at that, the volume on that day right there. And now you're moving back into that. You can kind of fuel that buying a little bit, last a little bit longer there. All right, so that's the morning star. The evening star is just the opposite. Moving up, up. Should have a nice up day. Hopefully, it'd be nice to get a gap up, small body. And again, they're called stars because they look, whether it's a kind of a, whether it has a body or not, whether it's a doji or it has a little bit of a body, it just kind of has that. The key is the indecision. It has an indecision look to it. And then the next day, you preferably you gap down, you trade into the body of the first day, and it's a down day. That'd be a pretty strong bearish reversal formation. That'd be the evening star. Let's look at Home Depot. That was a big, huge body, but it wasn't real compact either. Didn't have a lot of tails on either end. Then you had a nice gap up. This would be a shooting star formation because it had the tail up. We went over those last week or the week before, something like that. Might have been the week before. And then the next down day right here. And that down day was trading into the few days before, so it was definitely. These are again, it's the opposite. It was the opposite emotion there. Okay, these people are buying in. They have this nice long uptrend. They've been missing out. They finally are like, this thing's going up. I don't want to miss it anymore. So they start buying in right here. And then what happens? Now it moves up. They think they're right. It moves higher right here. And then boom, a sharp move down. Now they're losing. Now they went from a gain to a loss. And what happens when you go from a gain to a loss? You're like, better get out. You're really mad that you let it go from a gain to a loss, but then you don't want it to become a bigger loss. And you start feeling like you got in at the end. You got in too late, and so that kind of fuels more selling. And dropped sharply, and that would really. This is what really should have happened with Home Depot, because look at the run that it went on. I mean, how many days? And I know because I felt this way. How many days during this move did people say, man, I wish I would have got in? That thing just kept going higher. I mean, I was looking at this thing back in here. I remember when it broke out. And I was like, man, that broke out. Huge volume on the breakout. But this thing's gone straight up for like 2 weeks. I'm not going to buy that overbought condition. And then it kept going higher. Like, I can't believe this thing's going higher. And it kept going higher. I can't believe this thing's going higher. And then you finally get a pullback right here. People are like, "Oh, finally, I get it's come down a little bit. You got a little bit of a discount here. You got a little bit of a correction." And so then they're starting to get in again here, and then, damn, there's your recognition. That was a big down day compared to all these little smaller up days. By the way, this thing still looks like it has another move down, just because you on that selling, you broke to a lower low right there, rebound a little bit, then you've gone lower. I mean, this looks corrective right here. and see that the previous move is down. This is looking a little bit more corrective. Looks like it has another move down. We'll see. It doesn't look like that today. I mean, today's a pretty decent up day today. All right, let's look at United Healthcare, UNH. Here was a decent upward day right here. Here's kind of a compact indecision day, another kind of shooting star type formation. Now this one didn't gap down. In fact, it gapped up. Actually, it opened about where it closed. But there again, that's where you have to be a little bit flexible sometimes. But look at the move. It was a big down move. It traded not only in the territory of the first day right here, but it was beyond that. Encompassed the last couple of trading days right there. Went down lower right here, and then it's been kind of drifted sideways. This is another one. It looks like it. You have that impulsive move down. This looks more corrective. It should have another move down at least. But I could say that about I've been saying about that with the rest of the market for the last few updates, and it hasn't had a decent drop. And then let's look at Travelers here, TRV. An upward move right here, bullish candle, indecision, bearish reversal. Again, not really a gap down, but you did have the gap up on the first day, or first day of the second day, which is what you'd like to see. And then it started to trade in that candle there. Now, as with all these, I emphasize this all the time. These are all basically just short-term indicators. They're not necessarily saying that if I see an evening star, it doesn't mean that I'm going to go into a long-term downtrend. Now, a lot of times when ultimately if the market does have a bigger sell-off, you can see that a lot of those chart patterns showed you an evening star ahead of time. But this, it did drop the next day pretty significantly, and then you had a bullish reversal day right here. So you got to read that. How to move up. Here's a little bit of a kind of a hammer formation. How to move up off of that after dropping a little bit. So you might say, well, boy, that was just a short-term reversal. Yeah, I mean, that's all it's kind of indicating is it's showing you that short-term price action. Like I said, you can combine it with longer term, meaning like, let's say I have a longer term uptrend. I have wave A, wave B, and then wave C. I get a big down day, an indecision day, and the next day it moves up. So I get that morning star formation, and it's coming out of a larger corrective ABC pattern that's correcting a larger uptrend. Well, that could indicate to me I'm about to kickstart a new larger uptrend because of the context of what I'm saying. But all this is showing me is this thing is showing me that in the near term, this thing should go up. It should have another up day off of that. But maybe that's it. Again, the most important thing is you're understanding the psychology and the behavior. And hopefully I was able to explain that clearly. And if not, you can go back and review the class recording on that. But, because people talk about price action all the time. Well, what is that? Or trading psychology. Well, what is that? And that always frustrates me. And so I try to, because I had to figure it out myself, what that means. And so hopefully with some of these examples, talking about the emotions of the trade that you all are familiar with, you start to understand that those emotions are showing up. They're showing up in picture form. They're showing up here where we can visually see them taking place, and then we can use that to our advantage, give us that edge, and increase the probability of a move going higher or lower. You get all this stuff down, and you really will feel at times that you can predict what's going to happen next. And when I see a real strong reversal pattern, and I do a class, I say, hey, the market's going down tomorrow, and the market goes down, man, you feel like the smartest person in the world, and you feel like Nostradamus, and then the market will humble you, and crush you at some point when you were getting a little bit too cocky, and it didn't quite. The lower probability move ended up happening, but that's trading, and that's going to happen. None of this stuff is going to be absolute, but like I said, anything that can give us an edge and increase our confidence in something taking place. I mean, how do you know when to increase your risk into a trade or to take a bigger chance? Well, if you don't know what you're looking at, it's like the roulette table in Vegas. It's like, I don't know what it's going to land on, and I'm not going to risk my hard-earned money on a guess. But if you could recognize that, hey, this is going on, and there's a high probability this thing is at least going to go down tomorrow or go up tomorrow, and it had everything you were looking for. It had the big down day, it gapped lower, indecision day, and then the next day it gapped up into the body of the pretty far into the body of the first day. Well, boy, that had everything you're looking for. I'm ready to take a bigger risk on this trade, and that's where you can make that decision to take a bigger chance and have a better chance of that's going to work out for you. That's when you want to take that bigger chance, is when you're confident that the probabilities are in your favor. And if it doesn't work out, you also are confident in saying, okay, the lower probability move happened. I was just unlucky. Okay, and I can handle a loss a little bit better if I know that it was about being unlucky, as opposed to, man, I didn't see that coming. I should have known that. Everything was pointing to this thing dropping, and I was buying. Why was I buying? That's when you feel stupid. But I can handle the lower probability outcome taking place from time to time, especially if the majority of the time the higher probability situation is working out, and more times than not, I'm making money off those situations and losing money. All right, hopefully this is helpful. Again, we'll continue to see if we can't go into even a few more of these little candlestick formations to help you learn them. Yeah, we're running out of them though, but if we don't have more candlestick formations, I'll think of something, maybe some more additional chart patterns we can go over in the trainings here. So, all right, thanks everyone. Have a great week. Have a very happy and safe Memorial Day, and we'll see you next Tuesday for the market update. Bye, everyone.